This is your general market summary, housing market summary for British Columbia for July of 2026. The markets are basically stable. At the end of last year, in December of 2025, we said we're going to see basically a flat market in 2026, or possibly a little bit inching up a little bit. And that's exactly what we're saying. It's kind of a tale of two cities. The lower mainland is not doing as well as the interior, but the interior is flat. Some areas like the North Okanagan seem to be inching up a little bit, but the lower mainland, Vancouver, the Fraser Valley, they are definitely in a suppressed market. We started to see a little bit of recovery coming out of in the first quarter of 2026, and now it seems to have leveled off and inching down, especially in the Fraser Valley. The what happens is sellers need to be more aggressive. Sellers are still hanging on to their price estimations that came out of the 2020 to 2022 post-COVID boom, and things have changed. Things have gone down. What's making them change? There's a lot of various different vectors that are pushing on the market, on the real estate marketplace. First one is interest rates. Interest rates went up, skyrocketed, and they brought them down. The Bank of Canada rate went all the way down to 0.25%, and then they started inching it back up. And then they once the market slowed down to molasses, now they brought it down in 2026. So the interest rates for the Bank of Canada rate have been sitting at 0.25%, sorry, 2.25% for the last 6 months. So that's stable, but you have to remember the only rates, as far as your mortgage rates are concerned, the only ones that depend on that Bank of Canada rate are the variable rates. And most people lock in for a period of time, for 3 or 5 years. That rate is dependent on the bond rate, and the bond rate has inched up. And that's why you've seen some of the closed mortgage rates inching up over the last month or two. The other thing that the rates are based on is inflation. And inflation started to rise. And so that basically stopped the Bank of Canada rate from going down, and they've held it steady watching that inflation rate. That's a good thing that the last announcement for inflation was 2.8%, and that was down 0.3% from the previous announcement, which is a good thing because the Bank of Canada looks at that rate and they say we need to keep that rate around 2%. So that's what they're going to do. They're going to hold it steady probably for the rest of the year and just watch that inflation rate. So the interior is doing, as I mentioned, better than the lower mainland. Basically, the North Okanagan seems to be doing slightly better than some of the other areas of the interior, but it's a fairly stable market. However, that doesn't mean that houses are selling the way they used to, not by a long shot. And the only houses throughout British Columbia and basically Canada, there are some areas that are doing better than others, but and the only way a house is selling is if the seller is aggressive in their pricing. And sellers have to decide how far down they'll go, because if they drop the price and it's on the market for 30 days and it doesn't sell, the rule in our business is it's still overpriced. So sellers need to be more aggressive in pricing in the interior and the lower mainland. And I don't think you'll see any change in that for the rest of the year. It's still going to remain flat, still going to remain basically a buyer's market or a balanced market as we go into 2027. The year will end up being slightly better than 2025. 2027 now will probably be slightly better than 2026. We might see some aggressive movement up, but there needs to be some solutions for the war in Iran, the tariff war. There needs to be a trade agreement between Canada and the United States. Be interesting to see what happens in the midterms. Anyways, that's the general summary for your British Columbia real estate market for July of 2026.